Good afternoon and welcome to our How to Start a Business webinar. Thank you all for joining us. We'll start with just some quick introductions and some explanations. So we are TaxAssist accountants, and we are a network of accountants across the UK with about 400 locations and about 78,000 small business clients. And our role is to support our network and in turn their clients throughout all technical crisis, and particularly the COVID-19 challenge we're currently dealing with. So quick introductions in terms of who we are. So I'm Darren Moore, I'm Group Commercial Director. So my job is to look after the technical teams and the commercial teams and to make sure that we're supporting our network and supporting our clients at all times. And that's been particularly relevant in the last few months in terms of everything that's been happening. I'm joined by Gary.
And I'm Gary Bugdale. I'm Managing Director of TaxAssist Direct London. I work with clients, including startups, and help them through the whole journey of their business.
Both Gary and I are accountants by background. We've got about 45 years between us in terms of dealing with small businesses and clients. I won't tell you how that 45 years is split between the two of us, but we've got a lot of experience of dealing with these issues, which is why we're here presenting. Why are we covering it now? We're covering it because there's been a huge upswell of interest in starting a business. In the current crisis, current situation, it's inevitable that people are starting to think about the future, and a lot of them, and we'll come on to this, a lot of them are thinking about starting up their own business. There are some stats out there that suggest there are huge numbers. So we're expecting lots and lots of new entrants to start up businesses in the coming months, and we wanted to make sure that we were supporting our clients and our prospective clients with as much material as we could. And this will be part of a longer term project to build more material to help that startup community. What we'll be covering today is really an overview, because this is a huge and very broad topic. We could sit here for hours and hours talking about startups. We're not going to, but it's a very complex subject, lots of different parts to it. What we want to do is give you an overview. So we're going to be starting by talking about planning and just how important planning is in terms of putting thoughts together, getting that plan in place. We're then going to go on to just thinking about some key areas that we think are particularly relevant for startups, things that we know can catch out and that people don't always think about, things that we think are really important in terms of helping those early stage businesses to become successful businesses. So we'll talk about that. Of course, we'll have to talk about tax and VAT, because that's an inevitable part of being a business owner. There are personal tax issues and there are business tax issues you need to be mindful of. And we'll talk about how we as a profession, we as a network, can help you with lots and lots of questions that will inevitably come along the way and things that you'll need to understand in more detail. So, why are we talking about this? Well, we're talking about it now because starting a business is probably more relevant than ever. There's always been a strong entrepreneurial tradition and drive in the UK. There are something like 4.8 million small businesses out there at the moment in lots of different shapes and forms. We're obviously going through unprecedented, that's a much used phrase, isn't it? But it's very true. Some very unusual times. And businesses are inevitably under pressure, individuals are under pressure. But we know from experience in previous recessions, in previous difficult times, that does tend to drive a new business setup. And we know that there are significant numbers of people out there who are thinking about a new business. So it felt like the right time for us to be helping our clients or prospective clients about things that might be right for them. So it is probably good timing. As it says on the slide, there are, per surveys, significant numbers now looking at starting their own business because they're looking at options, they're looking at the future and what they need to do. So the survey suggests that 1 in 10, which is a huge number, are looking at perhaps starting their own business. So it's hugely topical. Gary and I have worked with business startups for the last, well, I've been dealing with them for 25 years. Gary, just a little bit less, not quite as many years as me, not far off. And there are some pretty common themes as to why people do that we'll just quickly share. So I think everyone has had that idea at some point about having their own business. They're turning their, as I call it, passion into a business. I think that's always a driver. Doing something you believe in, you enjoy day to day. That's a really important point for many. And I think that usually comes to the fore when people are thinking about the future. People like being in control of their own destiny, and that's destiny in lots of different ways. It's not just about financials, but it's about lifestyle as well. I think that's a big issue for many. People like that flexibility. They like the fact that they're their own boss. They like the fact that they can, to a certain extent, control their working hours. That's not to say that starting a business is easy. It's very much not. As you'll appreciate, it is hard work. That flexibility tends to come at some point down the line, but it does give you as a successful business, lots of different options if you need them. And obviously financial reward, as we'll talk about, there are some different structures you can use that have different consequences as you as an individual, but there is undoubtedly financial reward there. That's both in terms of income and flexibility of how you take that income. As a business owner, you will have that, but also about creating an asset. And it seems a bit odd when you're talking to people who are starting a business to talk about creating an asset and possibly exit, because that's what people think about. They talk about creating value, and that's the other big attraction of starting your own business. It's not just an income stream. It's not just taking out a salary or dividends or whatever it may be. It's creating something of worth and of substance. And it's the ability to realize that at the end of the day. And we've been lucky enough to work with lots of different business owners who've walked away with substantial sums of money with a real recognition of what they've done through their career. So lots of good, valid reasons there. And the final one I pointed out is succession. It's not just about that asset and maybe selling the asset, creating income. There's also that plan to build something for the future, for future generations, particularly family. So lots and lots of family businesses out there where succession is appealing. So just a few reasons there for starting a business, but that's a snapshot of why there's such popularity around business startups, particularly in the UK. So where to start? So step one is planning, and I mentioned this earlier. So creating a business plan. So why do you need to do that? The old adage of planning, failing to plan is planning to fail is actually very true. There are statistics out there that talk about how successful businesses have been through that planning phase. And it gives you a number of opportunities. It gives you a chance to develop your thoughts, just sense check a little bit. People sit there with an idea at the back of their mind, something that could work. It could be something they're currently working on. It could be something completely different. But there's always that value in just stepping back and just challenging what you're doing. Does it make sense? Can it work? So that's usually an important part of a business plan. Thinking about strengths, weaknesses, opportunities, and threats. That's a classic way of interpreting an opportunity, but that's absolutely true when you're looking at your own business. Just again, sitting back and objectively measuring things. It gives you a chance to plan resources in particular. Staffing, as we'll talk about later, is hugely important for businesses. Very expensive, but critical to scale. So planning resources is one of the reasons for a business plan. And the last 2 points are really important again in terms of the future. So particularly at the moment, being clear on financials. So do the numbers stack up? Can it make money? Can it maintain cash flow? Can it work? Identifying funding. The vast majority of businesses will need some working capital up front. It's very rare they don't actually. So that business plan helps you identify those funding requirements, and in many cases, new business startups have to go to look for funding. It could be banks, it could be friends and family, it could be other types of funders, of which there are a number. But that credibility piece of having a plan that people can read. Many of you will have watched Dragon's Den. You'll all have seen elements of planning there. The Apprentice and the business planning section, they're a bit overproduced for the purpose of television, but they're true. People do take away some level of credibility from a business plan with financials. So for all of those reasons, a business plan is probably the right start point for you. So what does it include? We could talk all day about business planning, and we won't, but very, very simply, it should include a few key elements. So an overview, what are you going to do and why? Just setting out a basic framework of what the idea is. It's always useful to look at your market and how it operates and what the competition are, because you've got to think about how you sell into the market. Is there an opportunity? Is there a gap? How will you sell into the market? What will your pricing look like? Those things are really important. You need to think about resources you need. I talked about the importance of staffing. That is important because it's expensive, but it does mean that you can scale a business. But it's equipment, it's premises, it's all of the other things you might need to make it work. And it needs to include financials. And I've talked about financials. Usually they would be simple cash flows, simple funding needs. Now, I don't want you to think that the plan is a 30-page long document. If you're talking about building a very big business, maybe you need something very complex. But if you're building a simple business, then keep your plan simple, but make sure you cover those key areas. Also think about what it means for you. So what do you need to take from it? What do you need to live, really, in terms of income? Does it give you that ability to sustain and give you a chance to devote your time to it? And think about the longer term. I've already talked about exit and plans. Think about that longer term. How can it work for you? How can it work for you and your family? So lots of lots of things to take away there. Writing a plan is important. I think that's something to take away. And there's some key steps there to help you. The other point to make is it's useful to have a sounding board sometimes. That's again where our profession comes to the fore. Accountants are very familiar with business plans and what they look like and what they contain. So we sit there for many of our clients and just help them as a sounding board and a critical friend almost, to just look through their plans and say, does that make sense? So step one is a plan. Step two is about structure, and I'll pass over to Gary to cover this.
So once you've done your business plan, one of the important things that you'll need to do is decide what structure you're going to use. The reasons for this is that actually there are a number of choices that you can make. You've all probably heard most of them, which are sole traders, partnerships, limited companies, and actually getting that structure right at the beginning helps you to plan for the future, helps you to mitigate your risks, and helps you to gain any tax advantages that there may be of different structures. So a lot of this information will come from your business plan. So setting out your ideas and your business plan, understanding how you're going to get your money out of that business and what funds you need, will all link into what structure you're going to then decide to take going forward. So obviously the tax consequences of doing so are going to be high on the agenda, but not always dictate what you're going to do.
I think it's safe to say that there's no right answer.
No.
A lot of what we'll be covering today is about a guide and an outline of an approach. What we can't give in most cases actually is the right answer, because there isn't a right answer. It is about personal circumstances, isn't it? And good planning is always about understanding the individual and understanding their needs. And it does need to link into business planning and what they want to do. And it does need to link into future plans as well, doesn't it, in terms of the right structure.
Yep.
So yeah, pros and cons is the right wording there, really, isn't it?
So what do you need to consider? Well, lots of different factors. Commercial risk is going to be high on the agenda. So you need to decide whether you want to take that risk personally, or whether you want to lock that into a limited company or another sort of structure. You also need to consider what sort of profitability you're going to have. Your business plan will help you to determine whether you may, as a startup business, have initial losses, which would be better used in one structure, or whether actually you have sufficient profitability to mean that you may want to go in a different direction. Your funding needs, as Darren already mentioned, understanding your funding needs at the beginning. There's certain structures which enable you to access certain funding better. Getting your money out and how you want to get your money out is also key. There's much more flexibility around something like a sole trader than there is on a limited company. Ultimately, it is your business, and you can do with your funds what you want, but there are more structures around it, something like a limited company. These are very complex things. You need to talk to the accountant if possible about your options. Sit down, they have great expertise in these areas, and being able to do these sorts of things and talk to them and help you understand them is quite crucial. So the first one, the one that is probably the most popular, is a sole trader. This is probably because it's the most simplest way to set up a business. One thing to understand is that it's not distinguished from you as an individual. So any liabilities in there are your liabilities, any risk is your risk. There are obviously ways of mitigating that risk through insurance, but ultimately everything falls on your shoulders. It's taxed, you're taxed as an individual, so taxed at income tax and national insurance rates, and I'll explain a little bit about that in a minute. There are lower compliance costs. It is much easier to set up. You basically have to register with HMRC, and then you can just go, obviously you have to make a few decisions on what you're going to be called and how you're going to act, but ultimately you can just get on and do it. There are some advantages of it, so early loss reliefs in early stages of trading, things that need to be considered, and there's a bit more flexibility around expenses as well. So very similar to a sole trader is a partnership. So if there's more than one of you, then you're a partnership rather than a sole trader. So ultimately, more or less the same thing as a sole trader, in that the risk and the liabilities sit with the partners, but ultimately there's more than one of you. We would suggest that you have a partnership agreement. Doesn't matter whether you're husband and wife or best friends, and a partnership agreement to understand exactly how the partnership acts and what happens in certain situations, like if it was dissolved, is always an important thing. It is taxed as an individual, exactly the same as a sole trader, and also you will need to do a partnership tax return. So there's a little bit more compliance costs, but not that much more than a sole trader. One option to think of if you're going to go down a partnership route is a limited liability partnership. So It's very similar to a partnership, taxed in exactly the same way, but obviously you've got the ability to have a limited liability, so there's a little bit less risk of that structure than there is a normal partnership. And the final one is a limited company. So as I said, most people will go down the sole trader routes, but there may be a few occasions where you'll want to then go set up as a limited company initially. So these are very separate from the personal affairs of the owners. You're in effect ring fencing the liabilities. One thing to be wary of, although it has got limited liability, so that means that the legal entity holds the assets and liabilities itself and the risk. There are certain rules that a limited company has to follow, and the directors have to follow, and if you don't follow them, then there is still a possibility then that any creditors or anybody else can come after you as an individual. And these are taxed at corporation tax rates, so taxed individually, and those rates are slightly more beneficial than sole traders, but you still have to take your money out of the company, either through dividends or through a salary. And actually, you can be taxed at high rates if you don't set that up properly. So this is more flexible in some respects and is more tax efficient, but if you have to actually plan it in the right way. Definitely talk to an accountant if you're going through a limited company, because it can be much more complex how you take the money out of a business. And actually, if you get it wrong, actually you can end up with a higher tax rate than potentially a lower, more flexible one. The compliance needs are actually more complex for this. There's more filing accounts at Companies House, so the compliance costs can be a little bit higher. But the actual structure is seen as more credible with funders and with the outside world. So a lot of people don't go down that route straight away, but it's certainly one to plan and understand. Just because you set up a sole trader, you can then change to be a limited company when the time is right, when profits are high enough and when it makes sense to do so. But it's certainly one to consider at the outset.
Okay, so you've done a plan and you've considered structure. You're happy that you've got a viable business idea there, and you are happy that you know how to run it in terms of structure. And you've probably got some advice along the way, particularly on the structure side, because the choice of structure is about individual circumstances, as we've explained. So you're then looking at funding. Why are you looking at funding? Because almost inevitably there will be some funding needs in the business. Now, the business plan should cover a number of things, including details, just an overview of your cash flow. So if you look at typically the first few years, you look at ins and outs, just money's coming through the business, and what is the need. And cash flow is generally needed for two reasons in new businesses. It's either there for working capital, because you will probably have losses in the early stages of trading. It's very unusual for businesses to go straight into profitability in our experience. Generally speaking, there are startup losses. So you need to be able to fund those losses. And those losses could include your own needs from the business in terms of salary or dividend, depending on what structure you've gone for, but there will be losses there. The second reason that you need funding is setup costs. Now, that could be investing in plant and equipment, it could be investing in premises, it could be any number of things, but there will often be a funding need around that. So you need to think about your cash flow, you need to think about that working capital need, that all comes out of your plans. You need to consider the timing of it. Bear in mind that your peak cash need is not necessarily when you start up. Okay, you'll be buying equipment, premises, taking on staff at that point. But if you've got early stage losses, typically your peak cash need is sometime in the future. So you need to think about when that cash flow peak need happens and plan around that. And you need to be realistic. What you can't do is run out of cash. The business failure rate in this country, as with pretty much every country, is relatively high. And there are lots of reasons for that around lack of planning and preparation. But the biggest single factor is often cash flow and running out of funds. And that's not because the business can't be funded in every case. It's because the business didn't put enough funding in place in the first instance to give it a chance to succeed. So as well as looking at the cash flow and saying, what do I need? It's always sensible to build in some level of contingency, just so you've got the headroom, because things don't always work out as planned. I think it's safe to say at the moment, it's even harder to plan for the future. So you need to make sure you have that capacity to cope with things that may be thrown at you. So step one is to identify your funding needs. It's then a question of where do you get the funds from? So again, typical in new business setups. The first port of call is always your own pocket. It will always be your own funds. External funders like to see that owners have, if you want, skin in the game. So they like to see that people are committing not just their time and their energy and their ambitions to it, but they're committing some funding to it as well. So the first port of call will always be your own money. Second typical place to find finance is, in reality, it's friends and family. So it's easy start point. So it's not structured debt. It's supportive, friendly debt from people you know and family members. And we don't know the stats behind that, but that probably represents the majority of startups, actually, your own monies and friends and family. So that's unstructured debt. Next port of call is there anything from the government? Now, the government's funding scenario has been completely changed through COVID-19, and an awful lot of their funding is aimed at intervention and business support, and that's existing business support. So there probably aren't the same startup and early business grants as there once were. Saying that, it's likely that government policy will be changing as we come out of this crisis, and it's likely that they will be doing more to stimulate the economy. So I think it's very likely that there'll be more funding available for early stage businesses because the government are likely to be encouraging that sort of entrepreneurial behaviour. So do look out for that, and do talk to us, talk to your accountants about what's available. Our job is, amongst many other things, to make sure our clients are aware of what they can access. So we think there will be monies available. So that's a possible source for you. Then you're into more structured debt. So you're into typically bank funding. And banks come in all shapes and sizes. I'll come on to bank funding in a second. And other finance. So that could be any other form of structured debt out there, of which there is many. Start with bank. So first point, which is quite an important one, you will need a separate bank account. Every business should have a separate bank account. There needs to be some demarcation between your own monies and business monies. Really important. It's really, every business has to account for its finances. It's really difficult to do that when it's mixed with your own personal monies. And Gary and I will have both seen many cases where people have got it mixed up, and it's complicated and it's difficult to justify to HMRC and others. So separate bank account is an absolute must. Those banks are your prospective funders. The days of personal relationship managers for small businesses are gone to a certain extent. Most banks do have their own startup functions, don't they? So most banks will have their own startup teams that have people who are dedicated to that function. So choose a bank, get some advice around the right bank from your accountants, speak to your bank, and then put your application in. And that application will almost every time need to be supported by a business plan, as we've covered in an earlier section. That's almost certainly going to be needed to demonstrate what you need and why. And think about alternatives. Banks are probably the right answer in many cases. It will be interesting to see the appetite banks have for startups post-COVID. They had put an awful lot of funding out there through structured schemes for existing businesses, but we don't yet know how they're going to react to new startups in current climate. So it might be worth you thinking about alternatives. And alternatives could be lots of different forms. They could be second-tier funders, so others out there that give general working capital facility that are probably more expensive than the banks, but they're probably a little bit more flexible around credit terms, perhaps. Or specific funders around things like assets. So asset-based funders, if you're planning to buy premises or buy vehicles or production assets, there are funders that will specifically fund assets. So lots of different alternatives there, lots of different places you can go to. That's usually on the basis of advice. So do talk to your accountants and your providers, not least because they understand who the providers are out there, and they can refer you into the right partners that they know will work for you. So funding is a really important part. Starts with planning, but lots of options to talk to. So business plan in place, structure in place, funding underway. You're now looking to start a business. So what's next? So what's next is actually controlling and managing that business in the right way. And the start point for that, and we're accountants, so you'd expect us to say this, but it is critical when you're running a business, even a very small startup, accounting and reporting systems. Why is it important? At a basic level, all businesses will need to have a record of their transactions. You need a separate bank account, as we've talked about, but you also need to make sure that you can track the transactions within that business, because there are responsibilities and requirements to report. Now, they will be different depending on whether you're a sole trader or a partnership or limited company, but you will need to report your transactions and the collective value of your transactions to the tax authorities at the very least. So you need to be able to track what the business is doing. But your accounts or your accounting system should be more than that. They should also be capable of helping you make the right decisions in the business to understand business performance. We would always suggest that business owners keep track of their numbers, even in a very simple way, just so they understand how it's performing. Now, that could just be the bank account balance. That, in some businesses, is as good as any measure of how the business is performing. Or it may be something more than that. Again, you can get some advice on that. It also helps you plan ahead. You need to understand where you are to think about the future, particularly if you've got a business plan in place that you're tracking against. So again, accounting systems help you on that front. And a few other things they help you do. They help you manage and deal with customer and supplier payments. You'll have debtors, money's owed to you. You'll have creditors, monies you owe out. You've got to keep track of those. You've got to keep control of those. So your accounting systems help you do that. And they help you maintain compliant records for tax and VAT. And we'll come on to tax and VAT requirements in a while. So that's lots of reasons why you need accounting systems. So how do you do it? What do you need? I would always start with keeping it simple. It's very easy to get bogged down in the complexities of accounting because there are so many choices out there. It's impossible to watch television or to go on the internet without seeing adverts from different providers. So it is a very confusing environment. But you do need to keep it simple because there's no point creating very complex systems that aren't necessary for a small business. You need to choose your accounting software wisely. I'm not going to sit here and advocate a particular accounting software package because that would be wrong and there isn't a right answer. It's about your own circumstances, but you need to choose an accounting package that works for you and your business. And you need to think about how it works and what you can do to make your life simple. I've said in the penultimate point, plan to spend your time on the business, not in it. Your job as a business owner is to build a business, and it's to bring your passion, your enthusiasm to bear, to create that business and then grow it. What you probably don't want to be doing is spending all of your time doing the numbers and running the accounts behind the scenes, because it's probably not what you're good at and probably not where your time is best spent. So ways to help you on that front, lots of good cloud accounting solutions out there, which can help simplify matters. Lots of automation options. So what I mean by that are things like products like Receipt Bank, which you may have heard of. Now, Receipt Bank is scanning and processing software. What it does is it gives you an opportunity to effectively take pictures of documentation. It gets automatically processed. Really powerful technology. 10 years ago, didn't really exist. Now it's fundamentally changed the way you can run your accounting systems, even as a very small business. So look at ways you can make your life easier. Use the technology out there because there's lots of it. Most importantly, get some advice. It is very, very complicated as an environment, always difficult to analyze. It's difficult for us as professionals who see these things day by day. So talk to us, talk to your accountants about how we can help you make your life simpler and focus on building that business, which is all important. Okay, Gary?
So now the fun subject, tax and VAT. So we talked a little bit around the structure about the different ways you could be taxed. I think at this point it's important to know that you need to understand how you're going to be taxed so that you can schedule out your payments that you're going to have to make and understand the deadlines that you have to meet. The worst thing you want to do is take your money, spend most of it, and then realise that a year later that you have a tax bill that you need to pay. So unfortunately, I've seen that a few times. People walk through the door with their information and then understand they've got a big tax bill that has to come out of next year's money, not out of last year's. So it's quite useful to talk to an accountant early on to understand when your tax bills are going to be and to plan for them so that you can keep a little bit of money aside so that you can pay that income tax or that corporation tax bill. First one to talk about is the personal tax. No matter whether you are a sole trader partnership or a limited company, you'll have to pay some income tax and national insurance at some point. Sole trading and partnerships, that will be through a self-assessment. Directors or employees of a company, you'll probably have a payroll, but more than likely you'll have a self-assessment tax return to do as well. If you haven't done a self-assessment tax return, then the deadline for that is the 31st of January every year. 5th of April is the tax year end. And when you set up your sole trader or your partnership, you need to make sure that you register with HMRC by 6 months after the tax year end, or you'll be fined for that. So with these,
and that registration point is really important, isn't it? Because it's often missed.
Yeah. So if you then decide to set up a limited company, then you'll be taxed. The company itself will be taxed at corporate rates. The corporation tax rate at the moment is quite low at 19%. The tax return that the company has to submit to HMRC is required for the company's financial year, so it may not, probably isn't going to be the same as the tax year, and that has to be submitted 9 months after the year end. The complexity around a company is that although the company is taxed on in its own right at 19% currently at corporation tax rate, you've also got to extract your funds out of the company. So that could be in a variety of different ways. It could be dividends, it could be salary, and they'll be taxed at the rates, at personal tax rates. What's really important and where you need to talk to an accountant is understand the best mix for you. And this may be tax-led, it may be find a tax-efficient way of extracting money out of the business, and it may be a mix of salary and dividends or interest or other means. Or it actually may be just what you need. You need 100,000 out, so that's what you're going to take, and that dictates the way you take it.
Yeah.
Now, that's a crucial answer, a question that you need to answer, and it's important that you talk to somebody. There's lots out there, but there's very easy answers, and these things aren't very easy answers, are they?
The 2 most common questions you get asked in accounting practice is should I be a sole trader or limited company? And how do I get money out of my business most tax efficiently? I think they're pretty much top of the list, aren't they, in terms of questions being asked. And the answer to both those questions is the same, which is it depends, which sounds a bit of a cop-out on our part, but it does very much depend on circumstances. Generally speaking, the view has been that companies give more flexibility over time for more profitable businesses.
Yep.
And that's been true for many, many years. And as the slide says, corporation tax rates in the UK are historically at very low levels, and globally actually are at very low levels. It's one of the reasons why there's so much inward investment into UK, because of the appeal of those low rates of corporation tax. What the future will hold, of course, we don't know. So it's worth keeping an eye on tax rates and changes and talking to your advisors about that. But that question of how you set up and how you take money out, really important, and actually really easy to get wrong. We've seen lots of situations where there've been profit extraction processes set up incorrectly, and it's had quite a big tax cost. So it's a really important point to note, and definitely one for you to.
There's been a couple of questions around extraction of funds from a company. The first one was around, should somebody bring their wife into the company in some way in order to utilise her tax bands? And the answer is, it should always be something, if you've got a partner, it should always be considered. You should look at actually whether you give them a little bit of salary to use up some of their rate, some of their bands, or equally, you should look at shares. But it does depend in terms of your personal circumstances. It depends on things like the strength of your relationship with your partner, because you don't want to give shares and then the worst happens. The second question was around having a company car when you're in a limited company. And unfortunately, as Darren said, that depends as well. It depends on the type of car, how you extract your money, whether you have some flexibility on whether you can take further dividends instead, the sort of the cost of the car. So there's lots of things. At the moment, there are some really good rates for energy efficient cars. You can get a benefit in kind of 0% on some of them, but it very much depends on your personal circumstances.
Yeah, UK, we're very fortunate in that we've got access to some low rates of tax across the globe, particularly at the corporate end. The flip side of that is we have one of the most complicated tax legislations in the world. So it does mean that some of these answers are a bit more complex, but it does, again, demonstrate why you need to talk to people and get advice on these points.
And the final point was around VAT. The registration limit is 85,000 VAT turnover in the first 12 months. So if you think when you start up that you're going to breach that, then you need to consider then registering for that and doing your quarterly returns to HMRC. If you don't think you're going to breach that, then you do have a choice. You can early register, and some entities will choose to do that. Again, it's something that you probably need to talk to an advisor about. It all depends on what you're doing, on what your expenditure is in the first year, whether actually your turnover, your expenses that you claim VAT on will be in excess of the turnover that you'll have to put VAT on.
Yeah, I mean, businesses sometimes choose to register early, don't they, to recover VAT on goods that they've bought up front.
Exactly.
So you do see that. The other point to think about there, which isn't actually mentioned up here, is think about your customers as well.
Yes, exactly.
If you don't need to register for VAT, but you choose to, then you're adding VAT onto your sales price. If you're dealing with individuals who are not back registered themselves and they can't recover it, then that effectively increases your cost versus your competition. So VAT is again an area that just needs a bit of thought, isn't it?
Yeah, for some small businesses, registered for VAT would just be nonsense, because their it just priced 20% higher than their competitors, and it wouldn't make sense. There are various schemes that are available, such as the cash accounting scheme and flat rate scheme, that again, as a small business, you probably need to investigate if you are considering VAT registering. Also, that can be really complex in quite simple sectors. So the financial sector and selling food is a really complex area around VAT. So you probably need to seek advice if you know you're going to have to register, or you think about registering.
Yeah, if you've got certain types, so if you've got partially exempt supplies, there are other things that can cause complications.
If your income's coming from board or from not-for-profits, then there's all issues around VAT around those sorts of things.
Okay, one final section. One of the points we made in business planning was around staffing and the possible need to employ staff. Why do people consider staffing as part of our business planning exercise? Because they have to work out whether they can do everything on their own. It's actually a lonely place to be as a business owner, or can be. And it's very difficult to balance your time to do the right things. So staffing is something that many small businesses look at fairly early stages to give them the support they need and the flexibility to go out and grow their business in the right way, because their time is precious. It is worth thinking about staffing needs in the plan, because generally speaking, staffing is about scaling the business and giving you the chance to do other things to try and help grow. What do you need to think about? You'll need to think about recruitment. So where are you going to find people? It could be your own contacts, it could be through social media, it could be formal recruitment, businesses of which there are many, so but they have a cost. So think about recruitment as part of your planning process. Where are you going to find those staff if you need them? We do live in a litigious society, so it's important to be doing things correctly from an employment law perspective. So you'll need some HR and some legal advice potentially. You'll need an employment contract probably as a minimum with a staff member, just to make sure you're protected as a business in the right way. And it's not just about attracting staff, it's increasingly about retaining staff, because people have options to move. So being a good employer, thinking about benefits, thinking about things you can do to keep those people is relevant for lots of businesses, including small ones. And the final point there is payroll. Payroll is something that generally scares most business owners, isn't it? Because it's very heavily compliance-based, and there are some penalties if you don't get things done in the right way. So there is a registration process. So if you're looking to take on staff, you will need to register as an employer, and you will need to think about how you're going to process payroll. It could be weekly, monthly, but you'll have to process it and pay it. And you'll think about the support you need just to help you as payroll rules change, which they generally do year by year. So lots of things to think about on the staffing front. Again, that's something that you might want to seek some advice on, because it can be complicated. So we've covered an awful lot of ground there. Apologies for running through that fairly quickly, but we wanted to try and give you a general overview of things that we thought were relevant. Gary, we had a few questions up front, which I think we've largely covered. We can have a look and see if there are any questions along the way. Not sure there are, just having a look on screen. So I think we will call it a day there. Thank you for those that have joined us. We hope this has been useful. We do know that there's an awful lot to this subject matter. We wanted to give you a flavour today. A couple of things that you can just bear in mind. We have recorded this session, so it will be available on our client website. Should you need it, www.taxassist.co.uk. So have a look, and there's lots of information on there actually that might be helpful for you. We will try and break this down into more manageable sections. Each of the areas we've covered is in itself a topic we could have covered through a webinar. We could have gone into a lot more detail. We didn't want to do here and now, but what we will be doing is a follow-up. So there may be webinars, or it may just be content on our website. So do have a look for that if it's of interest, and do see if that maybe helps you with some of your thoughts and some of your questions. But if you do need to talk to us, please do. We are open for business. We have been throughout the COVID crisis. We do offer free telephone and video consultations for all of our clients and prospective clients. We can meet online. We do have a fixed fee in advance type process. We don't like surprises. So please do talk to us if you need to. I'm just seeing if there's a question that's come in. Doesn't look like there's anything we need to cover there. So I'll just wrap up by saying thank you again for your time. Do stay safe and do keep an eye on our webinars. We've got a number that we want to cover over the coming months. Do have a look at our support site, our website, and see if there's anything of interest. And thank you all for your time.